Hey everyone, and welcome back to the channel. Today let's dive into a hot topic that often comes up in discussions about the US economy: the idea of the United States having its own sovereign wealth fund. Now, according to the International Forum of Sovereign Wealth Funds, over 90 sovereign wealth funds worldwide manage over $8 trillion in assets. But why doesn't the US have one? Let's break it down. So, policymakers and economists have been tossing around the concept of a sovereign wealth fund for years. Countries rich in natural resources like Saudi Arabia with its oil have these funds to invest surplus revenues. But the US faces some unique hurdles that make creating such a fund pretty tricky. First off, let's talk about the budget. Most budget years before and after President Clinton have been in deficit. That means the US would be investing borrowed money, and with a national debt standing at nearly $35 trillion and interest payments over $1 trillion annually, the government simply lacks surplus funds for an SWF. A rough estimate shows the US's capital cost is over 4%, so an SWF would need to earn at least 5% just to break even, and with recent annual deficits exceeding $1.5 trillion, it's clear the US doesn't have the kind of surplus revenue that countries with SWFs do. Back during President Clinton's term we had some budget surpluses, but there's a debate about whether these surpluses were due to tax increases or fiscal restraint. A Cato Institute article by Daniel J. Mitchell argues that it was actually fiscal restraint, with federal spending growing at a reduced rate of 2.9%. Another critical aspect is governance and management. Who would make investment decisions for an SWF in the US? There's a significant risk of cronyism and mismanagement, especially given the current political climate. Accountability and oversight would be huge challenges. Would it be run by the Treasury Department or the Federal Reserve? The US economic and political landscape also plays a role. The idea of a government-controlled investment fund investing tax dollars in private corporate securities makes many people uneasy. The US economy relies heavily on private sector investment, not government intervention. Moreover, the American economic system is built on private enterprise and free markets. Investments are made by individuals and businesses, not by the government. This approach has driven economic growth and innovation and isn't likely to change anytime soon. Some suggest alternative funding sources like oil leases to generate revenue for an SWF, but the financial and political challenges make it unlikely for the US. The enormous national debt, ongoing budget deficits, lack of surplus revenue sources, governance concerns, and the preference for private sector investment all contribute to the unlikelihood. So while the idea of a sovereign wealth fund might seem appealing, it's not very feasible given the current circumstances. What do you think? Leave your thoughts in the comments below. And don't forget to check out our other videos to learn more about how these funds work. Thanks for watching.